Hello, Maverick traders. Welcome out to Maverick Currency's presentation on pivot points. When you talk about pivot points, they're a change in direction you can see on the chart, and it's price action analysis. Price is truth. Where the price is going tells us about the supply and demand of that asset. And it doesn't matter what the asset is. It could be a stock, it could be a currency, it could be crypto, it could be a futures contract, anything that's chartable. You'll be able to see those pivot points and they can tell you about trend. They can tell you about how important that pivot point is, at what type of level of support or resistance there is, and a lot more information. So you'll perhaps know more about pivot points than ever before after watching this class. I hope you enjoy it. Let's get to it. Starting with the power of the pivot. So when we say power of the pivot, what are we talking about? Well, every pivot point, which is just a change in direction. So they would call this a pivot high and this a pivot low. And here's a pivot high and pivot low and pivot high and pivot low. There's a lot of little minor pivots that happen, right? If we were to identify all of the pivots, we'd say this one and this one and this one and this one, and you just kind of go mark these zigzags, right? All these little pivots, but are they all important? Are they all critical and so forth? Not really, right? Everything starts as a minor pivot. Then they're upgraded to something more significant called an intermediate or a major pivot point. Now, within an uptrend, you will be making lots of little minor pivots, right? All of these pivots to the upside. On occasion, you'll stall out and there will be a corrective phase. That upgrades this pivot up here, this peak, this pivot high. It is now considered an intermediate or kind of a trend stalling pivot. If the entire, if this goes back up and breaks through, this was just an intermediate pivot. However, if the entire trend were to break down after this would be considered a major pivot point, a major level of resistance or trend, right? And so it kind of goes from minor to intermediate to major. Well, one way to look at that is what we call the power of the pivot. So we can count how many candles there are, how many periods of price action there are on each side. And you're only as strong as your weaker side. So based on what we can see here, there's 1, 2, 3, 4 periods above it on the left side. There's a lot above it on the right side, but we call this a P4 based on what we can see. Obviously, if we could go back a little further, maybe there's 5, 6, 7, and then we were up above it, and you'd kind of count and you'd say, okay, well, 5, 6, 7 candles. Here we were below and we kind of broke up to this area, so this would be a P7 based on what we can see. Or if we see one where we can see all of the data, look at this pivot. Okay, how powerful is it? Well, there's a lot of candles to the lower left, but how many candles to the lower right? Well, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, and then the 10th candle broke through, so that stops it. This was a P9. That's how powerful that pivot was. What about this pivot low down here? Well, there's a lot of candles above it to the upper left. There's only 1, 2, 3, 4, 5 candles above it to the upper right, so we can call this a P5 pivot low. Really, we can tell that there's going to be more because the coming days are going to kind of build off of that, right? So we can look at any of these and look at the power of the pivot. This pivot high, not very significant. It's a P2. Why? Well, you have quite a few to the lower left, but you only had 1, 2 candles below it to the lower right, and then you're up and through it. It's just a minor pivot. Here, how significant? Well, there's 1, 2, 3, 4, and then this one broke through, so it's a P4. It's just a little tiny pivot. What about this one? Well, there's quite a few on this side, but there's only 1, 2, 3, maybe 3 candles above it to the lower left, so this is a P3. This is a P3 pivot low. This is a P4 pivot high. This is a P2 pivot high. This is a P4 pivot low. They're just minor pivot points. Now, instinctively, you can see this when you look at a chart. If I was to just say, where are the most critical levels on this chart? Well, everyone would kind of spot this high and they'd say, well, this is a significant zone. Let me draw that a little cleaner. This is a significant area up here. And this seems to have been a significant level down here, right? So instinctively, you can kind of see those levels, but it's more than that. These are major pivots, meaning you have all of these candles above it on each side. That's why your eye sees that that was a major bottoming point. Here you can see there's all these candles to the lower left and all these candles to the lower right. This is a critical area for this asset. Now there's some other, maybe not major pivots, but you can see this was kind of an intermediate pivot. There's quite a few candles above it on each side, right? This is an intermediate low. This was kind of a little bit of an intermediate high, meaning you went through a corrective phase and then came up out of that. This started as just kind of a corrective phase that kind of built off of that. We've stayed below for quite some time. It's, started as just a little minor turn. Now it upgraded to intermediate. Now it's becoming more of a major pivot point. Now, if somebody says, well, it's only looking back that you can kind of tell that this minor pivot became an intermediate or a major. That's true. You can't really. Now, there are signs that maybe this could be something really significant as it's happening. Maybe there's a huge candle, maybe there's massive volume, maybe there's something that really pinpoints that, but that's not always the case. I mean, this pivot low, which happened to be the bottom, there was a little uptick in volume and there was a little hammer there, but there was nothing that told us that all of this was going to be the evolution. That was not, it's not in the cards that was able to predict that. So if you're hoping that, you'll know as soon as one little pivot happens that it's going to become some major turning point, that's just asking too much. But at least you can see the evolution and you can say, okay, well, we've got a lot of candles above it on this side. Right now, it just kind of looks like a little minor pivot, but then you say right here is important. We knew that this was upgraded. We knew we've hit an intermediate bottom. So that's important. That tells you that this has the potential to be a trend reversal. In other words, that's what intermediate, stopping points are. When this hit an intermediate high, you say, okay, at first it was just minor, but now it's kind of evolved into something a little more significant. Let's watch it and see if the trend reverses. In this case, it did. See how we broke through the moving averages and you say, okay, we went from downtrend, we're now uptrend, right? But this low is significant. And by the way, it goes from intermediate to major bottom because the trend reversed. This one up here had the potential. We could have come down and broken down and had this big breakdown and the trend would have reversed. And if the trend reversed, then we would upgrade it to a major pivot. But that didn't happen, did it? We didn't go from uptrend to downtrend. No, we didn't. Instead, we stalled, we corrected, but then the trend resumed. So this was never going to be anything more than just an intermediate kind of stopping point, a pause that refreshes, by the way, oftentimes. And so you paused, you corrected, and now the trend resumed, and away we go. Here, we've kind of hit maybe a significant low. You can see there's a lot of price action above it to the left. You can see that we're making a pivot reversal here. We've held on to the low down here at the 50 period moving average. The trend didn't reverse. If this can go up and break out, hey, this becomes an intermediate bottoming point. You had corrected for multiple weeks down to this level, start to break out this way, and you've got a nice intermediate bottom that formed there. As we look at another chart, well, in hindsight, you can tell that this was the major resistance, that this was the major pivot high, right? And this becomes, of course, major pivots become major levels of support or resistance. In this case, That is major, major resistance. Now, were there signs at the time? And this is a classic example of there were signals at the time that this was not just your average everyday ho-hum, kind of run to the upside. Um, First of all, we'd been screaming higher. Secondly, we're way overextended away from the moving averages. Third, the volume exploded. And fourth, you started to fall off of the highs and then the big gap down the next day. This gap down, although you could only call it at the time a P1 pivot because we'd only come down for one day, sometimes in price action, you can tell that something is more than even kind of, yes, this is just a minor pivot point for now, but you can tell it's something more than that. You can see that we gapped up to here. You can see that we gapped down away from there, that there is a lot of energy and probably too much euphoria around this asset. This is how exhaustions work. This is how major reversals occur, right? Oftentimes it'll happen on the downside where something's just getting annihilated and then it just explodes to the downside way, way away from moving averages. And then it has this big reversal day where it comes off the lows and maybe huge volume or whatever. And all these signs that it's kind of this big, what we call a capitulation, kind of a throwing in of the towel. Well, here it was happening on the upside. So we can see that this is just a minor pivot at this point, but we kind of know we can almost already upgrade this to intermediate. Why? Well, because it's going to take quite a few days for us to even come back up to that high if we can do that. And even if we could recover back up to the highs, it's going to have a hard time getting through there. We just kind of know instinctively, as you've charted a lot, that this is more significant. So as we're looking at this price action and we're saying, okay, it's kind of significant, of course, as you fall off, it makes it even more, it's going to take a long time. When you're this far away from that level, even if it was really strong in a recovery, it's going to take probably multiple weeks just to get back up to that high. It's just becoming more significant. And of course, as you try to recover, you establish lower highs, and then that breaks down. And notice what just happened. You established an intermediate low. See all these candles above it to the left and all of these candles above it to the right. But then what happened? Well, you hit a high here and you started to fall off, and you established a lower high. So the intermediate pivots tell you about the major trends. When your intermediate pivots start to make lower highs and lower lows, you are turning into a bear market. In a bull market, the intermediate pivots, here's another intermediate pivot. See all the price action above on that side and on that side? But what happened? Well, you stall out, you made an intermediate high. And so what are you doing? Well, you're in a bear market. Intermediate highs and intermediate lows are lower than the one before and lower than the one before. So not a huge surprise that we kind of come crashing down here. Now, at some point, this will start to correct up and you'll say, we've got another intermediate low. The problem is that as it rallies, it very well might make a lower intermediate high. You've got to get these intermediate pivots turning like they were back here. Here was an intermediate high, but it was higher than the one before it. Here was an intermediate low, but see how it was, you can't see the price action that came from down here, but it would have been higher than the one before it, and this one was higher than the one before it, and so forth, right? So these, in a bull market, these climb to the upside. In a bear market, they're going to the downside. Let's go live to the charts, and I'm going to show you examples from a variety of different asset classes. So let's come in and we'll start with EURUSD, which is a Forex chart. And then we'll go to a stock and maybe we'll pull up a future. We can do all sorts of stuff. So if we look at this chart of EURUSD, and we can go in, we can zoom out, we can go as far back as we want, But what do you notice? Well, it's been in a huge bear market, obviously, right? As we look at this price action, we kind of say, well, what's happening here? If you were to just look at this and identify pivot points and such, you could kind of say, well, here is a pivot low or pivot high, pardon me, and here's a pivot low, and we can see they're intermediate. See all these candles above that way and that way. See all these candles below that way and that way, but they're lower than the ones wherever they were before, right? And then you trend lower, 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 and we hit an intermediate low, and you could even call these maybe intermediates, but we hit an intermediate low, we hit an intermediate high, we hit an intermediate low, we hit an intermediate high, but you just see how these continue. The evolution of them is lower and lower and lower. So these are corrective phases. You go through these corrections, but each subsequent bounce just has less steam than the one before. So if we were looking at the power of the pivot, well, you can count all these candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All these candles to the upper left, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You can count all these candles to the upper right. There's no question that was an intermediate. It's not some little tiny minor change. It was a stopping point for a few weeks, but that's all it was. And then we established a lower high, and away we went. And a lower high, and away we went. Now we're establishing a low, and we're bouncing. Does this have the potential to kind of evolve into an intermediate low? Yeah, I think so. But the question will be, do we trend reverse? In order to trend reverse, you've got to get these pivots changing direction. You've got to get them moving to higher highs, higher lows, higher highs, higher lows. If we look at something else, you might look at something that is in an uptrend, and in terms of looking at another currency chart, you can see, same concept. Maybe we'll zoom in a little bit to have less to work with, and just really look at these closely. And maybe I need to zoom out, whoops, just a tiny bit. Here's an intermediate low. And so if we look at this from the standpoint of, you can count all those candles to the upper left and upper right. But notice what happened. Here was the intermediate high. See all the lower candles on each side. What happened here was, well, we pivot, we pivot, we pivot, but see how we took out that prior intermediate high. Now that doesn't mean you'll stay above it. See how this sunk back in, but notice when you hit the next low, what happened? Well, it's higher than the one before. And as we worked our way higher, well, now we made a new high. Now we'll sink back in, and we'll make an intermediate low here, maybe at some point soon. And as long as it's above the one before, then the bull market is intact in this currency. If those intermediate pivots start to reverse, then you've got a problem. Let's look at a stock chart. And again, these can work on any time frame. So we happen to be on daily charts looking at the big picture trends, but we could come into an intraday chart. We could look at these on any time frame we want. If this is Apple, the largest market cap stock, the biggest company in the S&P 500, and you can see some intermediate pivots, okay? Right? There's a peak, there's a valley. What's important is, which way did we go through those? Did we go up and through, or did we go down and through? Well, we went down. So we're in a bear market in Apple, right? At this period of time. At some point, you'll establish an intermediate low and maybe an intermediate high, but they'll probably be lower than the ones before. You establish a low that is lower than the one before, and as you rebound here, well, are we going to go above that? Are we going to accelerate up and through? You can start to see the trend reversal in the moving averages and hopefully in the price action as well. This needs to climb up through, and it's not to say it won't sink back in, because even if you come up here and make a higher high, well, you'll potentially sink back in, but it should be a higher low than this low. This intermediate low back here, I don't know why my drawing tool won't draw, so this intermediate low here. The next one, assuming we go to a higher high here, the next one that sinks back should establish a higher low, and away we go into a bullish market trend. So when you're pulling up these charts, a comparison of those intermediate pivots is important in terms of really identifying, are we in an established bull or bear market cycle? Now let's come over to another chart. This is light sweet crude. This is a futures contract, and I just wanted to show you that we can do this type of analysis on any asset out there, right? And so if we look at light sweet crude, the oil chart, what do we see? Well, this is the September 2022 contract, but what you can see is we were in a well-defined bull market, right? We established a high here, we came down, established a low, and importantly, you went through that high. As you went through that high, it took off. At some point, it'll top out, kind of have a correction, but clearly that low is higher than prior lows, this peak higher than prior peaks, and so on. We went sideways for quite a couple of months there, and then broke out, higher high. We're still above those lows from back there. If we establish a low here, you could, kind of make an argument that we're still above this prior corrective phase. Now, the short-term trend is broken down. That's without a doubt, right? You can also do minor pivot analysis. If you look at all these little minor pivots, you can compare them for short-term trading. So there we went above the prior high. Okay, I'm bullish, 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 bullish. Here, we broke below the prior low. Well, now we're in a little short-term downtrend. Lower peak, lower valley, lower peak, lower valley. So the short-term pivots are in that direction. We're in a short-term downtrend, but I think you can still argue that the long-term trend for oil has been working its way upward, and now we're in kind of a questionable phase. Does the bull market reemerge, or do we start to make lower highs and lows in those intermediate pivots? And I don't know that we have the answer to that yet. It's not as clear as it is with something like gold. Gold, we're in a downtrend. We're making lower highs and lower lows on the intermediate pivots. Here, we've definitely had a big correction in oil, but I'm not sure that it's really, again, lost the bull market mojo. We'll know it when we see it, when those intermediate pivots start to change direction and start to reverse. Let's think about this on a different time scale. If we come into an hourly chart, okay, let's remove all these lines. And on an hourly chart, of course, you're just looking at short term. But this might be helpful for someone that says, okay, on the hourly charts, we're in a downtrend quite clearly. If we were to scan out a little bit further even, you could kind of look at this and say, lower lows, lower highs, lower lows, lower highs. So the intermediate pivots on the hourly chart are in a downtrend. And that speaks to, on the daily chart, you're in a short-term downtrend. The hourly chart is going to show that downtrend just as well, right? So it's a little bit of a precursor where you could say, again, we're in this downtrend. This is important levels for oil, because if we were to look at the intermediate pivots in oil, they're trending lower, but if this could accelerate up and through, then what would we say? That the short-term trend has turned positive. It has turned bullish. That we're now in a bull market on the hourly chart. And that probably means that this daily chart has reemerged into an uptrend, right? So you can take this down to a shorter time frame to kind of see what's happening. Let's go to EURUSD, which we were looking at before. On the daily chart, we're in a bear market. That's clear as can be. But if we come into the hourly chart and we say, okay, what's happening on the hourly chart? Well, we were in a definitive downtrend, bear market in the hourly, but something has changed recently. See this intermediate pivot high? We went up and through it. And because we went up and through it, we're now kind of making this series of higher highs and higher lows. And Euro USD has been really for the last couple of days more of an uptrend and turned into a bull market cycle right here. As you took out that intermediate high, you're now in a bull market on the hourly chart time frame. Now, do you trust it? Maybe this short-term time frame doesn't hold, but if you're a short-term trader, that's significant. And sure enough, it has led to more upside. Again, just because you're making a higher high doesn't mean you won't sink back in. This one stayed above it, which is nice, but you could have pivoted here. This could have sunk back in a bit and still been kind of okay because this was higher than this was higher than that, and you're likely to kind of continue to progress. For now, we're progressing that way. When will that turn? Probably if this pivot low gets broken, right? If we fail to accelerate here and make a higher high, and then we come and take out those lows, now we're going to start to progress in the opposite direction. So are the pivots showing you something that the moving averages are not, that the price action itself are not? Well, maybe not. You could see that the trend started to reverse in here as we started to get above the moving averages. But notice here, you got above the moving averages, but you couldn't really trust it because the pivots were still downtrending. Here you got above the moving averages and you could trust it once we accelerated above. Now I've got that confirmation. Not just that we're above the moving averages, but the pivots are moving in the right direction. And that gives us confidence. That tells us more that we're in a bull market or bear market cycle on this time frame, and that's valuable information. That helps us to really see the full picture, and the pivots will do that. Last thing we'll look at, you can do crypto analysis. So let's come into one more charting platform. Now you'll notice that I've kind of been jumping around to different charting platforms, and I did that on purpose to show you that all of these principles are applicable on any charting platform you're using. So let's look at Bitcoin, and Bitcoin on a daily chart. Okay, Bitcoin is a risk asset, and we can kind of see this pivot high if we come back here and look at it. And obviously we had kind of made a pivot low. We'd probably been downward trending leading up to that. This pivot low here, notice that it's clearly lower than wherever we were at over there. So, the Bitcoin chart, these intermediate pivots, they've been going to the downside for some time. This peak is lower than this peak, and that's an intermediate top. This low is lower than whatever low was back there. This low, again, let's keep drawing these. There's a pivot low, intermediate bottoming point. Well, it's lower than the one before. Wherever we establish a peak, we're going to compare it to the prior peak. Let's say that Bitcoin starts to fall off. Well, it'd be back in a lower high. Now, is it possible that this is trend reversing? It is possible, but it's probably going to be a process. So I would not be rushing out to buy Bitcoin like my hair's on fire, thinking that, oh, now we're in a bull market. No. What's probably going to happen, even if it's good, and that is going to be the evolution of this thing, is you'll establish a high, you'll sink back in, and the first clue will be what? Well, basically, you'll probably fall off of there, and then it won't go as low as before. You'll create an intermediate pivot, and then start to work your way up, and what'll happen? Well, first, we'll see that this low didn't break to new lows. So the bear market has lost its power, right? And then we accelerate up and we break above wherever this pivot high becomes, we break above it. Now we can say confidently we're back in a bull market on the daily chart. This is not a bull market. You're still major pivots, these intermediate pivots, they're still trending lower. We established a lower low. We're not there yet. And it's going to be a process. You'll have to back and fill, and assuming This is the bottom in Bitcoin, which is just, not established. It doesn't have to be, by the way. You might establish a lower high here, fall off, and then go to new lows. That's very possible. I'm just saying, from an optimist standpoint, even if you think it has bottomed, it'll be a process where it'll probably peak here and then, establish a higher low first and then really get that. So it's going to be, sometimes traders talk about it needs time. It needs time to work this off and develop and so on. This is a lot of what we're talking about, where we need to establish a high and then create a higher low and then start to build off of that. That's where, head and shoulders, bottoms, and double tops and double bottom, all these patterns, they're a process of time and they take time to develop and to form and just to be created within the chart. So I hope you've enjoyed this class on pivot points. Remember what we've talked about today, that you can grade these, you can look at them across different time periods, you can identify the power of the pivot. Most of them are minor, and then they grow to become kind of a corrective phase. Okay, now it's an intermediate pivot. Now we can compare it to the ones before to really identify bull and bear markets. You can also compare these little minor pivots for establishing just little short-term trends. Like, we could be buying Bitcoin lately because we've been establishing higher highs and higher lows on these little minor pivots. So is the short-term trend up? Yeah, it has been for the past couple of weeks. We've been kind of climbing, not mega powerful, but it's a little uptrend within a broader bear market. Now, that's not my favorite. My favorite would be to trade the downtrend within a bear market, right? That's the easier approach. That's the more simple. That's the more profitable in most cases. Thanks everyone for joining us here today. On behalf of Maverick, I am Corey Halliday. It was fun to be with you and explore pivot points. Have a great rest of your day, and we'll see you next time.